Well, we're going to go into our panel session now. So we're going to be joined by Aaron Weaver, who joined us earlier today, and Fiona, who joined us also earlier today, and Alex Blyth, who's representing a different part of his life in terms of the work he's doing with the Mission Fund. So would you guys care to come and join us? Perhaps if you could sit in these two seats, that would be really helpful. So we've got you guys ready so we can get you on the camera. Thank you. But Alex, what about yourself? Because it'd be interesting to know what your thesis is for your organisation as well.
Yes, we're a little bit different. I mean, my mission in life is very much curative disease and curative solid tumours in particular. And my own experience with Life Sciences, which I think many of you in the room saw earlier today, was just how hard it is if you've got something that's potentially curative therapy to actually get that to be invested in and taken seriously when you haven't yet got the evidence is very difficult, because there's like a belief gap. If you go into something incremental that's a bit of a me too with a tweak, you actually don't need so much data. So if I'd gone to people and say, hey, I've got another CAR T and it's just got a slightly different antigen that I'm going for, can I have some money? It would have been a lot easier than saying, hey, I've got something that could potentially cure all solid tumours, completely new mechanism of action, using a cell type no one's ever really looked at. You have to have a lot more evidence. So in light of that, the Mission Fund has basically been built up to help entrepreneurs in those early stages to get a proof of concept. So it pays for the killer experiment, so up to £500,000, that's then carried out by a third party. And we've been very fortunate in having people like King's College, Imperial, and even now Cancer Research UK to basically conduct these sorts of experiments for the fund, so that you can then enable that entrepreneur to go on and be successful and be able to raise a serious amount of money because they have the killer evidence to show that their technology works. And it's a massive gap. No VCs go there. It's all too early for them. Business angels tend to be scared of therapeutics. Pharmaceutical companies just keep doing the same old because that's what they're comfortable with. And meanwhile, it means only 5% of all therapies in clinical trials have any hope of being curative. I don't know if you're aware of that, but that's the truth. And so it's one of these situations where we can all sit back and think this is someone else's problem, but the reality is almost half the people in this room are going to get cancer at some point. And if you then apply it for your loved ones, it's almost certain that somebody who you care very much about is going to get cancer. And we can all think about doing these things later, but by the time you get it, the sad truth is it's too late to find something to deal with it. So that's why the Mission Fund was set up, because although I think LIFT has got the best chances I know of dealing with the problem, I'm doing everything I can. So that's what's behind that. And we're also backing missions in degenerative disease, so linked to longevity. So that's another mission on top of solid tumours. And then the third one is mental health and preventing neurodegeneration.
Great. So Stephen's going to join us instead of Aaron. Aaron had a bit of a mix-up on calendars. So Stephen, thank you for joining us again. I think it would be very useful if we could, just to get an idea of Rejuveron's model, because at the end of the day, your presentation today was very clinically focused, but you are an organisation that does invest. So could you maybe just give us a little background to you I don't know what you'd call it, a platform or what your organisation does, so it'd be very helpful if you could.
Okay, thank you very much. So apologies again from Aaron, couldn't quite make it back in time. We call Rejuveron a biotechnology platform model. And I think I'm new in biotech. Since I joined Rejuveron, I was at Big Pharma before. So I'm not confused by this. But the traditional investment world sees biotechnology companies with, single lead therapy and then a second or third program coming behind. And then venture funds, raise the money up front and then deploy accordingly to have a portfolio. And we're a mixture of the two. Okay, and that's just how we operate. It gives us very good operational synergies. We do all the legal, back office, accounting, HR at the top co at Rejuveron. Our incubated early companies only have scientists in them. They share laboratory space and reagents, and we just cross-charge. It's just accounting. And so we're very lean and efficient in our incubated portfolio companies in that sense. And because we raise money at the top company, Rejuveron, we can also deploy it relatively carefully and judiciously amongst those that need it the most at the time.
Yeah, understood. So if an investor is investing in your platform, then they're obviously having a portfolio spread in terms of their risk and obviously and their reward as well. Yeah. And you mentioned before that you've got a multi-site model. So do you apply that virtually across the whole? Well, there's 3 sites, yes. So your methodology is across all 3, is it?
Yeah. So because we also allowed ourselves to invest in later stage companies that we're very excited about, we also have a mixed model in the portfolio. So we have 2 clinical companies. They're physically in Belgium and Toronto. And so we just happen to be distributed because we don't place a requirement to be in Zurich on any of our subsidiaries.
Yeah.
But if we can encourage people to join the incubator space in Zurich, it's good. If they're obviously remote, they don't, and it's also fine.
Yeah.
We have no thing on that. So back to your point about investment in Rejuveron, because there's a bunch of ex-pharma scientists doing all the diligence and doing all the work, we've kind of done some of that diligence work for you and made a portfolio of things that we think have a good chance of actually working in a phase 2A proof of concept trial. And, we looked at 300 or 400 opportunities over the last 2 to 3 years to pick these ones. So in that sense, we think we've hedged to one side of that risk bell curve in things that are more likely to work.
Yeah, understood. And of course, if anybody has any questions, please feel free to raise your hand. Tim, question.
It's a question for probably all 4 of you, and I've been asked this question multiple times today by people who are here. And the fundamental question is, how do investors get involved? I think we've seen a lot of very interesting presentations, some really compelling business cases. And both the coffee break, the lunch breaks, people have been coming up to going, well, how do I invest? I guess for all 4 of you, I think the audience would be interested to hear a little bit more about how they can get involved.
Well, if I may, I would summarise the sort of the level of requirements at sort of a lower level for where you are, and then obviously Fiona, you're in the middle range, sort of lower to middle range, and then Stephen at the far end. So it'd be really interesting to know where you're attracting your investors from and what you're pitching. If we can perhaps go in that way, that would be very helpful. So,
sure.
Alex.
Yes, it's a bit like Goldilocks and 3 bears, so I'll start. So Mission Fund is a smaller fund initially. We're just starting with a 10 million fund we're doing now. And then we're scaling that to 100 million once we've done our own proof of concept, because what happens is when we give the killer evidence and we show it works, you get a 10 times increase in the value of the company. You then run a bigger round and you call back the investors for that. So at the moment, we're very fortunate that investors I have in Lift, who've been very pleased with how Lift Biosciences have told me to find 10 more Lift Biosciences. So they've come in behind the Mission Fund. Some larger charities, I think I already mentioned, are looking to come in on that as well. And then also a lot of wealthy high net worths are coming in. And, the checks that they're writing are sort of 500K and up. So that they can come in to basically help find the next curative therapeutics that are unicorns. So these can be massive payoffs, so that you can have companies that would be 1,000x. And I just find it incredibly shocking that the whole industry misses out on that at the moment. At the moment, if you look across the best VCs in the whole industry, the number of unicorns they've created from seed going forward, the very best ones, is 2. It's pathetic. So I think we could do a hell of a lot better than that, and we look to be the fund in the future that has the most unicorns.
So on that basis then, it's a mixture of individuals, family offices and some charities, is that right?
Absolutely.
And is the charity investment, is that straight equity or is it considered non-dilutive?
No, what we do is, because we need the experiments done, they're charities that have their own labs. So we basically, rather than paying King's College or Imperial on some of the companies, particularly if it's cancer, we can pay for the charity to do it, and their contribution is they put it forward in resources. Right. So no money leaves their kitty to go into a company which doesn't have the right optics. So instead, their contribution is they run the experiment, so we don't have to pay for it.
Okay, so you're getting paid in kind, as it were.
Indeed.
Yeah, so Fiona, in terms of the work that you've been doing with your funding rounds, I mean, some of it's your own capital, as you've obviously identified. What's the pitch and who are you pitching it to at the moment?
Right, well, it's an excellent question. So a lot of it has to do with educating the investment community, because this, to your point, is a tremendous market. We are going to see 1,000x companies. This is the market when I was graduating from school in the early 80s. Computers were young. I was using a 300 baud modem in my dorm room that hissed at me. And now we're up to 10 gigabits per second over wireless technologies. So it's come a long, long way. But in the very early days, big pharma is a kind of a very stable and conventional community with their own thinking locked in to a certain way. So our mission is to educate the investors. Everybody over 40 years of age is a customer. The science is here. The money is starting to come in. This is a perfect storm to take the industry off. That's why I am putting my own money into the fund. We have my investments in just a year. I haven't been investing for that long, are doing quite well at 1.3x overall on the portfolio in just a year. So I'm very pleased with it. It's going into the funded cost, and I'm putting in on top of that more of my own money. So I have skin in the game, and I'm leading by example.
Yeah, and in terms of the other investors that you're approaching at the moment, is that a mixture of, again, individuals, family offices, or are you looking at any institutions?
It's family offices, some of the more progressive thinkers in the industry. It's some of the people who trust me that I made money for in my last company, who believe that I have assembled a good team. I'm not a biologist, but I spent quite a bit of time on my own learning about it, so I have trust from some investment community. It's also a small fund. It's a $20 million fund. And we need to get going. We just have a lot to do. Just looking at the list of companies that are approaching us, we're so inundated. We have created 1 day a week where we do nothing but we give each company a 15-minute slot, followed by our own internal discussion, so we can filter effectively all the investments that are worthwhile looking at. But there's a lot going on, and it's really exciting. Yeah, so one way or another, we're going to keep going.
Keep on rocking. Well, obviously, as you said, in your deck, there's a lot of very interesting companies that you're already working with. And Stephen, how about yourself? I mean, obviously, your organization is, again, probably a mix of those, perhaps a bit more institutional.
Yeah, so Rejuveron raised 22.5 million A round. Major investor was obviously Christian Angermeyer via his Apiron group, who is Aaron, who unfortunately couldn't make it. And so we've just closed a significant, mid-range double-digit B round. The press release is ready, but it's not out yet. So I don't know. I don't know if I'm supposed to say it or not. So it's gone. Despite the obvious, macroeconomic situation with the Nasdaq drawdown on the biotech and everything else, we've done very well. Most of our funding, as far as I know, is private, individuals, family offices, a part of anyone in Christian Angermeyer's network, which is vast, has been asked to invest, and we've had great interest in this round.
In terms of the category of longevity, I always imagine a future in the end when we go to a venture capital company's website and you go to the drop down about their areas of focus, that we will see longevity in that drop down one day. We know it's happening, but in terms of the investors that you're speaking with, do you have a feel for longevity being something as a theme that they're ready to accept as an area of science that is solid now?
So again, as far as I know, talking to life science venture funds and strategic funds and pharma-backed venture funds, still a reasonable degree of skepticism about the field. I'm not sure the word longevity is helping us. I think healthy aging might help us more. It's just two words, not one. I can't think of a better single word. This is a positioning kind of discussion, right? There is always significant interest from a group or individual in one or two of our portfolio companies because they tend to understand one or two more than the other three. So there's clearly interest there. Because we're a portfolio, we represent a great way for the new investors in this space to come in and dip their toes in the water with us and see how this rolls. In that sense, we're very good. For those funds that have their own very clear scope and strategy, we are by definition not so interesting because of the portfolio, and they want to talk to the individuals, and that's something which we are also starting to do now.
Yeah, and Alex, in relation to the work that you're doing, you're obviously very firmly focused in oncology as well as longevity. Are you finding resonance in the term longevity still, or are you kind of hiding that below the other work that you're doing? Just, generally, it's kind of interesting to understand how you pitch it.
Yeah, well, I find that some of the investors we have are very young, successful people like crypto investors and things like this. And for them, longevity is the aspiration that's completely realistic for them. And that's what they're after. And so, we address that as a fund because that's one of the big areas of interest. I think in terms of humanity and probably the majority of the population who aren't fortunate enough to be so wealthy, so young, I think healthy aging is a more attractive term that's more believable and less sort of sci-fi. Mm-hmm. And so that seems more credible as something where you can get realistic curative things happening in the next 5 years, as opposed to telling people they're going to live to 150 this generation.
Yeah. So Fiona, you're obviously getting in early, as are you, Alex. How do you protect your investment going forward? I mean, obviously, there's only so far you can go in terms of the next round of funding and the follow-on. How do you manage that? How do you approach that to make sure you're not going to get into a very diluted position in the future?
Well, I would say dilution is a good thing. Dilution means more money is coming in, which means the company went to the next steps. We should not be afraid of it. I think there are regular protections built into safe documents that we all use coming in early, and that's basically where we are with a lot of our investments.
Yeah.
And so there are the usual mechanisms when you go into a stock round. Then you have some anti-dilution provisions, just like other VC funds are using. And we use all the instruments. But to me, dilution, it does not scare me. It will happen, and it's a good thing.
Yeah. And just, Stephen, in relation to what we heard from Kristen earlier today, so obviously they're one corporation with multiple assets, all at different stages. Your model is slightly different to that. You're one organization with obviously ownership of different organizations. So there's going to be a point, of course, where they're going to hand off and need more money, whether that's through third-party relationships or otherwise. So do you have a feel for how you're going to manage that going forward as you're now moving into these phase 1, phase 2 trials?
So the easy way to answer that is to say it's going to be on a case-by-case basis, which is kind of an obvious answer for everybody to give. We do give this consideration. As I've already said, some of the sort of the life science strategic investors are clearly interested in one or two of the members of the portfolio rather than over the others. And so we're already allowing them to engage in conversations to come in at the lower company level. But we just started thinking about how to do this right now for some, but not necessarily all.
So by default, you are now talking with some of the big pharma organizations as part of your collaboration to exit strategy.
Yes.
Yeah, interesting. Does anybody have any questions? I'm sort of taking dominance on the question side of things. Obviously, I'm here with the microphone, so I'm bound to. But if anybody else has got any questions, please pipe up. So just in terms of where we are now with longevity and the science of longevity and the risks still that are out there, do you feel panel as a way of the evidence that we're now starting to see that, as I started at the beginning of the day, these aging drivers, that the science behind those aging drivers is really starting to come through, or are we still stuck generally in the land of the mouse model at the moment?
Yeah, I think the mouse model's finished, really. Yeah, I think I know Dave Sinclair did a nice model of the aging mouse and the younger mouse, and showing that the younger mouse is blood going into the older mouse makes it younger and so forth. So that was very useful, and I think it captured the imagination of people. But I mean, the real relevance of a mouse model, I think, to our aging is quite limited. I thought the last presentation was very good, actually, on that. But I think the future is using organoids from humans and actually showing how you're able to extend the life of those or slow down the cell aging of those. I think there's a lot more work that needs to be done on the clocks that are being used in terms of the immune system. I think there's some very good points made today that really the immune system clock is one of the most important ones. That's the regulator of your body. And a lot of the clocks I've seen don't seem to capture the immune aging element enough. And I work completely on immune systems and see massive heterogeneity. So yeah, that's where I think it will go, and we will see a combination of lab on a chip with organoids with a sort of artificial intelligence interface that acts like it's the whole body, and we'll be using that instead of a mouse model, I think.
Right, I agree on organoids. I would add to that there are people who are desperate to get treatment whose time is running out. And so we also need a way to get through these regulatory barriers and offer this treatment to those people who are willing to take a chance and experiment on themselves. And I also agree about the biomarkers. I come from a test and measurement industry, and I am completely shocked looking at biological metrics, how much they fluctuate. We don't have enough resolution. We have massive amount of information to be processed and analyzed. So we do need to move to humans, and we need a good way to measure what's going on, and we really don't have that. We have people taking dozens of pills every day, and we don't know how they interact. Not even PhDs I turn to trying to manage my own, rejuvenation routine. They can't give me guidance beyond 2 or 3 substances. It's very, very hard to analyze. So we need better analysis, and we need more access to human trials.
Stephen, just picking up on the biomarker question, and of course the age biomarker, which is a very illustrative way of understanding people's future health. And there was Eric Verdinen recently has just changed the landscape on that. He's made some statements about where he feels some of the current clocks and systems are. So interested on your thoughts from the scientific side of things, bearing in mind that we want solid science to underwrite what we're doing. What your thoughts are on clocks at the moment?
Yeah, so I'm not a clock expert, right? But I understand the way in which they're built, and everyone builds their own clock with their own sub-selection of CPG sites on the genome. The marks that were used to do, don't get technical, right? And Eric revealed recently he's made a new version of it where he individually looks at lots of different cell types individually to make a more accurate clock. Now, a clock, even the best clocks today, as far as I know, they're still only accurate sort of plus minus 3 years. So using a clock as a readout for an aging trial, it's going to still have to be a very dramatic effect. And I don't think there are any drugs that are going to have that dramatic effect. I might be getting into trouble there, but there may be. I think more important is that, and this is something we talk about at Rejuveron, is as we run our programs into the clinic, and we know because of the way we're selecting our projects, we use those biomarkers that the regulatory authorities already accept. We add in a whole bunch of others at risk and cost in this space. We take the blood work, we do some clocks, and so that as you see your traditional, clinical endpoints revealing that your compound works for sarcopenia or retinitis pigmentosa or whatever, you also start to see maybe that there's an effect on the clocks. This I suspect it will be good if the community could share that information, and I think most people will be open to that because you don't make a therapy company doesn't want to make money from a biomarker. So sharing across the field would be good. I think that I think we would be open to that, and you'll start to learn from your clocks in real clinical situations that they are actually working or not, and then eventually people will start to agree that they might be working, and then the regulatory authorities will take another how many years to accept it. But if you don't aim at it, you're never going to get there. And I think we as a community, there is a dialogue sort of ongoing about trying to add in extra exploratory biomarkers into your trials. You know, it's just going to cost a bit more on top.
Yeah.
But you're building a data set that will help everybody in the field.
And just before we finish on, just a short answer from all of you, if I may. You may remember the chart I showed this morning, which showed the biotech industry and then the longevity count as a 50x derivative of that. Do you feel, in your own experiences now, that longevity ultimately will be absorbed into biotech, or will it sit separately on the outside as a real new field of research development and commerce? Alex?
I don't. Yeah, go ahead.
Okay. I mean, for me, it's business as usual, and we give things new names just to make them cool, don't we? I mean, I think the idea that I was using a VR headset a few years ago, and now apparently I was in the metaverse, is a good example of that. So for me, I think it's biotech, and you know, within longevity, you've got biotech. You're going to have diagnostics. You're going to have, you know, medtech. You're going to have the same sub bits. It's just, I think the real switch is helping people who are not just obviously sick, but people who want to be super well and be well for longer. And I think that's the real switch in emphasis. And imagining, I think the real change is not at our side, it's at more the hospital side. I mean, imagine a hospital system where you were going to your doctor to make sure that you were, you know, super well and going to live to 120, rather than you turn up because you've got something wrong with you. And I think that's where we need to see the real switch. I don't think it's in using buzzwords.
Okay. Fiona?
So yeah, I agree. It's biotech, but it's proactive medicine. So the real big difference is we want to treat people before they get sick. And that's the philosophy here. But every single one of our investments has an FDA path. They have a path through the FDA to market, because the fundamental mechanisms of aging, when you address them, you can always find an easy disease. So they find the easiest disease that's the shortest time through the FDA to market. But in fact, their market is much, much bigger than that one disease. The market is every single one of us over 40. And the longer we stay alive, the longer we remain a customer. So it is a huge market. And once that is completely understood by the investment community, we will have a flood of investment into this field.
Under the name of longevity, do you think?
Good question. We've been tossing around words. I think we've settled on health span.
All right. Okay. Stephen?
Health span is good. So I think, yeah, there are two things there, right? I think that this is if you look at it at the societal level, the way we develop drugs is that you make a drug and you test it in 10, 100,000 people, phase 1, 2, 3, and no one must ever die or have any side effects for it to then go on into hundreds of thousands, millions, 100 million, billion people. Still no one is allowed to die because the headlines are there and you can wipe off 20 billion market cap in 3 minutes and da-da-da-da. But society maybe needs to start taking a little bit of risk there too and say, well, to benefit 1 billion people to live 3 years longer with no cardiovascular issues, and then 100 people to have cardiovascular issues worse because of the drug, that this is a societal kind of philosophical question. That's the top level, right?
Yeah.
Somewhere a bit below that is this idea that you should be going to your doctor when you're healthy and getting things to keep you healthy, and not when you're sick. And there's an entire industry based on the fact that people are going to get sick. And we need to turn the industry to be based on people staying healthy. I I may be wrong with in old China, people paid their local doctor money every month, and they stopped paying the doctor when they got sick. I maybe have the wrong quote or the wrong country, but it's like, wow, why don't we do that? But this is like another thing.
Yeah.
The other thing is that any economic reason to shift to preventative health will only bear the fruits of that decision, which will cost a lot, 20 or 30 years later. And most Western governments only have 4 or 5 year terms. And so someone has to have real vision and risk their political careers to make that happen. So these are things to, I don't know if there's anyone from government here, but this is the next level up, which our ecosystem needs to be pushing at the people that make the policies as well.
Some big discussion points.
And the last one is that when you're in the lab, as I've been many years, making preventative models or preventative experiments, when you put the drug on at the same time as the disease insult, it's always easier to prevent than to reverse. So ironically, I think it will be easier.
Right.
From right down the lab level.
Interesting. Great. Well, panel, thank you so much. Alex, Fiona, Stephen, that's been very interesting. Please, thanks.